Good morning, traders, and welcome to the Pirate Traders Morning Show. My name is Charles. Today, I'm joined by Lady D. How's it going, Lady D?
It's going great. Hey, everybody.
All right. Well, let's start the day as we always do, diving into some TA so I can give you an idea of what I think is happening in the market and what I think might happen next. So I'm looking at the ES right here, the ES futures, and yesterday was a very interesting day. I would actually say the night before yesterday was very interesting, and then the way yesterday played out gave us more insights. So essentially, we had been for the first half of the week just kind of balancing, just kind of grinding around, waiting for the FOMC, waiting to find out what the numbers would be there and what Powell would say. And then the initial reaction of the market right after the FOMC was to sell off. We actually ended the day on Wednesday with a spike down, which was a sign that the momentum was going to continue to the downside. So whenever we see something like that, there's sort of the higher probability thing that is likely to happen, which is either you're going to open inside the previous day's range, in which case that is the least bearish scenario. You're going to open inside the spike, which is very bearish, or you're going to open with a gap down, which is like the most extremely bearish. What almost never happens, what is extremely rare, is that you end a day with a spike down and then you open the next day with a gap up. Okay, that is not common. And so when I saw that happen yesterday, it really sort of started to set off the alarm in my head to say, wait a minute, maybe this market isn't rolling over. Maybe it wants to continue to the upside. So yesterday, the market opened, it filled the gap, which is exactly what we would expect to see. After filling the gap, it turned around and started to trend higher, which is exactly what we'd expect to see. So then everything is telling me, okay, momentum to the upside. The market is going to go straight to the moon. We're at all-time highs. Things are very exciting here. And then immediately, in the D period, the market lost momentum, and we basically just went sideways the rest of the day. We did poke a little bit higher at the end of the day, but to me, this is just a bell-shaped curve. I'm sure D will see the Q as being slightly different, but for me, this is just balance, really. And so that's very interesting because it's two separate signals on two separate time frames. On the intraday time frame, the market was really going nowhere. As a matter of fact, it closed exactly on the opening price. Okay, so the market was just basically going nowhere for a day. But on a daily time frame, we did get higher highs, higher lows, and we did get a gap and go. Okay, so I would say I was neutral to bullish going into the day yesterday. Very curious to see what the overnight would do last night. Well, what did the overnight do? It just grind around in an insanely exact range. It basically just was grinding between Wednesday's high and yesterday's closing price / yesterday's opening price. It went nowhere all night long. So that tells me two things that are important pieces of information. One, there's a lot of uncertainty in the market. No one is in control. No one is sure if this market is going to go up or down from here. Everybody's making, it's 50-50. Half the people think it's going to go up, half think it's going to go down. The other thing is we now have a lot of pent up, momentum building in here, right? The more time that we spend balancing, the tighter that we make that spring so that when it finally breaks, it's going to make a breakout. So to me, today's trade is going to be super simple. And I'm basically just going to use the overnight high and the overnight low as the levels to tell me what to expect. So I'm expecting we're going to chop and grind when we're in between those levels. So that is like 57.77 and 57.60, right? So as long as we're in between those levels, I won't try to take bets. I will just watch the market grind up and down and flip around and do all sorts of stuff. If we get above the high and get support, I will assume that we're going to continue back up to yesterday's high. Okay. How much further than yesterday's high we're going to go, I don't know. So I'll have to monitor for continuation higher from there. But I'm pretty sure we will get to yesterday's high because of all this pent up selling that happened in the overnight. Okay. The selling from the second half of yesterday and the selling from the overnight will get squeezed if we start to get support above that overnight high. Now, if we fail, if we look above that overnight high and pull back in, I would assume we're rotating to the opposite end of the overnight range. Okay. And the exact same thing at the low. If we get below the overnight low and we get new selling, I assume the market's going to pull back to start to test the upper end of Wednesday's range. Okay. At the very least, testing yesterday's low. And I'll be monitoring for continuation lower from there. If not, if it looks below and fails, it's going to rotate up to the opposite end of the overnight range. So there's a lot of complexity right now because there's uncertainty in which way the market is going to move. And there's a lot of pent up, momentum building. So it could make a hard break one way or another today. But it's very easy to see where we observe what happens. And it's the overnight high or the overnight low. So it's as simple as that for me today.
And Charles, I had a question for you because this is something that I struggle with in my own trading. It's like when we're in this blue skies kind of level up here, I tend to feel more jittery and more anxious because we have no levels above us. Like it's just blue skies. And so how do we manage our trades? Like what can we do to stay calm, like at these super high levels where we have no levels above us? Do you have any advice about that?
Yeah, it's a great question. And I don't think I have a perfect answer for it because what to me kind of makes trading in blue skies a little bit fun is the fact that there's so much uncertainty, which means what happens when you're inside a previous range, like if the market has been here before, every trader are looking at the same levels. Everybody's looking at what was support or resistance in the past, and they're looking for that to become resistance on the way up. So that's where they're putting their orders. So it's very like mechanical in the way that it moves up. Whereas when you're in blue skies, everyone's picking a different level. Maybe they're using Bollinger Bands. Maybe they're using, Ikemudu Cloud. Maybe they're using the VWAP with standard deviation. Maybe they're using Fibonacci's. Maybe they're using measured moves from the previous day. Whatever. Everybody kind of has different levels that they're looking at to start to either take profits on their longs or start to enter shorts in the blue sky area. So to me, it's kind of fun in the fact that you can get much bigger moves. You can get much smoother moves to the upside because there's less resistance at these like exact levels. But then again, when you talk about entering trades, it's very, very hard to know where to take profits. So in general, when the market has levels above it that could act as resistance, I will put take profit orders at those resistances, right? So say there's a large node on the cumulative or whatever. It's like I will always take profits there. And if the market gets more momentum, I'll re-enter the trade and try to catch the next leg up. But when we're in blue skies, I'm almost always just trailing the stop. So it's like if the market starts trending higher and it looks like it can keep going higher all day, I just stay in the long and keep using cessation to trail my stop. And then I get stopped out wherever I get stopped out.
So what is your advice then on stops? Do we manage stops the same way we do when we're in balance areas, or do you give it a little bit more of a leash when you're in blue skies? Because it tends to be, I think it's a little more volatile because you have either people panicking or don't fear of missing out, FOMO. People just keep buying, and then the market can move really quickly. So
yeah, so for me, once a market is trending and I'm in a trend trade, I'm always trailing it exactly to cessation of the trend. So it's literally always 2 points below the previous low. Is like that's where that order will be every time as soon as the new letter prints, like at 11:31 or whatever. The minute that new letter prints, I move it up.
Oh wow, okay.
Now, if I was trying to do it tighter than that, say I'm looking for more of like a quick little scalp trade, I would say give it more breathing room in blue skies because, like you say, there's much more volatility. There's much more randomness in terms of how quickly the market will flip and reverse because it's like everybody's nervous. Where is this thing going to run out of steam? So as soon as it starts to run out of steam, they all want to get out of their trade immediately and take profits.
Yeah, well, can we take a look at the NQ from yesterday? Because I want to show some people what I'm seeing.
I'll put your screen up.
It's a little bit different than the ES. So here on the NQ, and let me know if I need to make it larger, but one thing I'm really looking at for today is, so we have this buying tail in the A period. The B period, obviously, it looked like it was starting a trend. We broke to the upside after the initial balance with the C period. And then right here is where I got like, wow, look, we stopped one time framing so early in the D period, right? And I thought, well, maybe that means it's going to be rotational. We're just going to rotate up here at higher prices until people find that the market picks a direction. So that gave me pause when I saw that, but then the market immediately continued one time framing higher in the E, F, G, and then H. See this, this little weak high up here in the GH period? That to me looked like it was about to be a retest failure. So it did. So the H period basically just matched the G period. So the market was like in indecisive mode for an hour. Remember we talked about that last week, where the market can just drive you crazy at certain levels. So we're at the high. People are expecting, you know, this big trend day to the upside. And then all of a sudden we pull back. We stopped one time framing a second time. So that was another, like, I was cautious to go long because we had stopped one time framing twice. And then the market comes up here. It leaves us this weak high, right? And then it sells off the rest of the day. So on the NQ, we have this P formation. And as Jim Dalton always says, the P formation kind of signals more short covering rather than short covering and new money buying. So I think for today, it's just something we really need to watch. I mean, my target for today is going to be that this high is going to have to get repaired. That's just what I'm feeling is going to happen. However, you know, look, we one time frame down the entire second half of the day yesterday. So, and we closed at the bottom of the value area, and now the overnight value area is lower. So, and also, you know, to me, this is like a 45-degree angle here. So in the overnight, so I'll be watching this level where I have a prominent overnight POC, because I think if it breaks below the overnight low, there's so much weakness below, like watch out, right? But we can't argue that the momentum is still up. I mean, this momentum is definitely to the upside. So what are your thoughts on all of that?
Yeah. So, going back to your idea of like the market got cessation and then it immediately started one time framing and then made this weird fucking high and then it broke and then it reversed. Yeah, yesterday was what I would describe as a bot shenanigans day, a day where the computers were artificially manipulating the market moves. Here, I'm just going to switch over to my screen. I've got the queue up, but I'll just switch so I can point out stuff. So like if you look at the first cessation that happened in the D period, look at where they reversed right at the opening price. So that's right. Like WTF, mate. And then
they held the opening.
E period high made a poor high. F period high on the ES. These were all poor at like the same level the whole time. Looks like the NQ made a slightly higher high, but yeah, it was just like the market was reversing at exact levels again and again and again and again,
and driving people insane from
so when
11 to 1.
When I see that bot shenanigans, I just always remind myself this isn't a normal auction process, right? Like, don't sit here and try to make sense of this as being a normal day with normal trade, except that it's the bots doing whatever they're doing. Look for opportunities. There's always opportunities to make money, you know, especially if you're going to buy those reversals at exact levels. But, you know, don't get too flustered or frustrated when the market, you know, does weird stuff, basically. And I know that's an unpleasant answer because people want the market to always make sense and to always be able to explain everything and to predict everything. And like some days the market really fucks with you like that. It's just the way it is. Okay, so now let's carry that forward. Let's talk about your P shape.
Yeah.
Because this is one of those fun things where it's like, you know, it's like art is in the eye of the beholder. You know what I'm saying? So I could totally see an argument for yesterday being a P-shaped profile. The market started down here. It worked its way higher. It spent most of the time and brought in most of the volume at the high. But I could also make a case that it was just a balanced day because it closed so close to where it opened. You know what I mean? Even on the NQ as well. So this could just be a very funky looking bell-shaped curve. And does that really matter? No, because they're both kind of giving us the same information. A P shape, like Dee was saying, is basically a sign that there is momentum up, but that momentum is more short covering. It's not necessarily follow through. It's not necessarily new buyers chasing. It's just shorts getting out of their trades. Whereas a rotational day is seen more as like neutral, more as like 50-50. So either way, you should be cautious going into this morning, trusting the momentum up, thinking, boy, they really got to convince me that this market is going to go higher. So I think your analysis is perfect. You got the 45-degree angle in the overnight. So if they can fight their way through that, then it would be okay to get bullish with support, at that overnight high, because you'd be like, all right, we are trending higher on the daily. We still have a gap and go from yesterday, and we're above the overnight high. But just like you said, if that overnight low fails and then it turns into resistance, there is more weakness below the NQ than the ES because they didn't fill their gap yesterday. So the ES filled that gap, brought in those buyers. There's less of a need for a pullback, but the Q, those stronger hands are waiting around 19,900. So, yeah.
I mean, the other thing to notice about yesterday, which I hope people saw, because whenever you single print out of an overnight range or a previous day's range, like this did in the A and B period, I mean, we just single printed out of there, and you can see from the volume, there's no heavy volume inside the overnight range. Like those are signals to keep your trades to the long side, like from the get-go yesterday.
Yeah, 100%. It's always about reading momentum, Ironically, that was the lecture I did yesterday in the workshop, was momentum. It's like, that's what it's all about. Momentum is the driving force of the market, always. Whether you're an intraday trader or you're a swing trader or whatever, it doesn't matter. Does the market have momentum? As long as it does, you as a trader should always be trading in the direction of the momentum. If you don't trust it and you don't think it's going to keep going, that's fine. You don't have to be in a trade, but you just always want to pay attention to momentum, because momentum will be right more often than anything else.
And also tempo. We talked about this last week, but like when you looked at the G and the H period, where in those 2 30-minute bars, the market was really just tricking people for an hour, just not making a decision. Those moments are kind of when the tempo was very slow during that entire hour. And that's where I was like, okay, I'm going to stop looking at this. I'm going to walk away for a little bit, because I didn't know what was going to happen. And I just felt like the tempo was not strong enough to see a huge upside momentum. And I felt that in the G and the H period. So that just gave me pause. Like, I'm not going to take trades up here until I have more information.
I love everything you just said. That's absolutely right.
And again, just talking about being in blue skies, I tend to feel like more anxious because the market can rip to the upside so fast. And you can, if you're on the wrong side of that trade, it's hard to manage when it moves that fast too, with your stops to move them to break even very quickly. It can sometimes move so quickly that you don't even have a chance, And so I just find it's harder for me to manage my emotions when we're in blue skies.
And I agree with you completely that, using a change in tempo, can be the signal to just walk away. To just say, you know what, this market's going to be a fucking nightmare, because I can see, the G period low is reversing exactly at the D period high. Whoops. I can see that the H period high reversed exactly at the F and G, that the H period low reversed exactly at the B period. And it's going nowhere. And it's to just say, like, I don't have to be in a trade. Like, this fucking market is crazy right now. Let me just leave it alone. Let it do its thing. And then I'm clear-minded when a good opportunity presents itself, Yeah,
so today I feel, much better now that I analyzed this information from yesterday, because I feel like, well, we've got this prominent POC right up here at 2137. The market likes to revisit prominent POCs, and we have the week high. So for me, we have 2 levels above that, are going to be targets for me today.
100%. And all you need is a reason to trust that, which is breaking through that 45-degree angle and getting some buying above the overnight high.
And then also, since it's third Friday, is it triple witching today?
It is. Yeah, it's a triple witching.
I hate triple witching days.
Yeah, triple witching, they generally tend to be tighter, more confusing days. Yeah.
Okay, so that's another reason to be extra cautious today.
Yep. I would just say stuff like this, like triple witching, anytime you have something like that, it's just a reason to not feel a need to force a trade. And sometimes you literally have to like look yourself in the mirror and be like, Charles, Don't force a trade today. Like, just relax. If
Yeah.
there's a good opportunity, you'll see it and you'll take advantage. Don't feel like you have to jump in a trade, you know?
Oh my gosh, when you say just relax, that reminds me, I once had a teacher where I'd be preparing for some like international competition in Japan or some huge thing. And my teacher would be like, just relax. I'm like, what? I can't relax. Are you crazy? Like, that's the worst advice you can give someone when you're like in this high pressurized situation where you want to succeed. Just relax. Like, how the hell do I do that? You know, when I have 3,000 people watching me on TV or whatever. So it's
also
just
terrible advice when you're in an argument with somebody and they're pissed off to be like, would you just relax and take it easy? It's like, no, I'm angry right now. I want
and that
to
just
be
makes
angry.
you angrier. Yeah.
Oh, it's
I
so
get
true.
it.
But yeah, as you know, as you're well aware from your years of experience as a musician, part of growing as a trader is learning to recognize your behaviors and learning to find ways to get yourself to overcome those things. And like, I just know triple witchings is one of those things where I'm always trying to force trades. And when I look back at it later, I'm always like, why the fuck did you get in that trade? Like, there was so much confusion. There was no reason you had to, you know?
Yeah.
Very cool.
Definitely.
All right, let me just blow through the chat right now. If you guys have not hit the like button yet, we got 88 people hanging out, but only 19 of you like us? What's with that? So let me just see if there's anything in the chat worth bringing up here. Nope, nothing jumping out at me. All right, great, guys. Thank you so much, Lady D.
Yeah. Awesome.
All right, we'll see you guys next week. Bye.
All right. Have a good weekend, everyone. Trade safe today.
Yeah, good luck.